Hey guys, Ralph here from the Endgame Investor, and I got CEO of Kootenay Silver, Jim McDonald, on the line. We have some news from Kootenay. There was a maiden resource estimate that was just published yesterday, and we're going to talk about that with Jim. First of all, Jim, how are you doing? And what do you feel about this news in general? Are you psyched? Is it more than what you expected? Is it about what you expected? How do you feel?
Yeah, hi Rafi. Good to be on the show again. Yeah, very happy with this resource. We're really pleased with it. It's a very strong resource. It came in about where we were hoping it would. The grade's excellent. The continuity of grade across the different veins is really good. And the all of the zones are open to expansion in practically every direction. So we know this thing's going to grow, and the upside here it looks fantastic. So we're really quite happy with this first ever resource out on Columba.
Can you explain just what do you mean a vein in expansion? I understand that silver goes in veins and lines, like we have in our body, but what does it mean to expand a vein?
Yeah, so um, there's lots of different types of deposits geologically, but these are veins. So people might be familiar with a quartz vein that's quite associated with gold. Silver is the same. And you just literally get fissures in the ground, and they'll run like planes like that.
Hmm.
And they'll move, they'll jog, they'll change their shape as they go deep as well. And those are openings, and those openings allow hot fluids to come up those and flow through those openings, and it's the hot fluids that carry metals. And in this case, it's primarily silver. And when the conditions are right, it deposits all those metals and leaves a vein with the metals behind in silver. And so when we're talking about the vein deposit, that's what we're talking about. And you'll have veins underneath a hot spring system, for example, and the hot spring is just the surface expression of something going on deeper. And so when we say that the veins or zones in the veins are open, there's certain locations along those veins that have the metals deposited in them. And so we haven't defined the edges of where the silver is yet. So we've drilled these things, we found a lot of silver, but there's still silver beyond. We haven't found the limits. And so we need to go in, and the first thing we're going to be doing is following up on this resource is finding those limits. So we call it low-hanging fruit. It's a very obvious target. You know there's going to be more there. It's open-ended. And so we'll just keep stepping out with our drills in a systematic manner till we find those edges of those existing zones, and then we'll go on to other veins that either we have very few holes in with some silver in to establish that they've got resource bodies, and even veins that haven't even been drilled.
So where does this put the maiden resource estimate, and where does it put it relative to other primary silver mines in the vicinity in Mexico?
Yeah, so this is a really great start on a maiden resource. And and as a project and discovery unfolds, you'll have an initial resource, you'll grow it, you'll have an up, you'll put up an update on that resource once you get it big enough. And then what you're looking to do is define a size of resource that you think is going to support a mine, and you start doing your economic studies, the first of which would be a preliminary economic assessment. So where this sits relative to peers, this is a really good start for a maiden resource compared to peers, and we see it getting a whole lot bigger. We see it getting to 100 million ounces or bigger with drill success.
Mhm.
So that's going to be the next stage is start drilling that to prove that. And it is truly silver dominant. It's like 90%, 95% silver, which is fairly unusual. I'm going to say probably less than 20% of silver producers out there are truly silver dominant deposits. Most are associated with base metals of some kind, whether it's lead, zinc, silver, or copper, silver, and they're quite often a byproduct of these different deposits and more dependent on the price of those base metals that are being mined than the price of silver. So that's an interesting dynamic in the silver business too, because if the base metal prices are low and investment's not going into finding more and producing more, then you get lower silver production, regardless of that silver price. Unless the silver price is so strong it takes over the economics of that particular mine. So the vast majority of silver that's produced is a byproduct of base metal mines of some type.
Yeah, I was talking about this on a previous video I had on the channel with a guy named Oren Elbaz. He was talking about this problem with the silver price, that people will continue to produce silver regardless of its price just because it's a secondary product and they may as well sell it anyway. Um, when the issue that he brought up is that this is creating silver deficits because if the demand for silver is higher than the price for it, then you just take from inventories, and then at some point those inventories become exhausted, and then you have a positive feedback loop where all that demand that's used to a supply coming out of inventory no longer has a supply coming out of inventory, and then what happens? And at that point, primary silver mines, I would imagine, take up a very important role in the silver industry.
Yeah, well, yeah, they do. Very important, and they're relatively rare. And so and they obviously benefit um, a lot more from a higher silver price than a base metal mine with silver byproduct production would, quite a bit more. So for leverage in the investor, pure silver mines or silver producing companies that are pure silver or silver dominant have way more leverage to the silver price.
Yeah, I mean that goes both ways. One of my
Yes,
one of
it
my first
does.
investments in my portfolio was when I was like 12 years ago. I think it was back in 2012 was SIL, the silver ETF, and I'm still down on that. That's one of my last ones that I'm still down on, and it was a long time ago. But
Yeah.
I expect it to go back up. I'm up on Kootenay, I think a lot of
Great.
people are. We'll see where that goes. So are there any highlights that you want to point out about this MRE? Anything that stands out that shareholders should know about?
Yeah. So, few things. Really great MRE. Majority of it is in one vein called the D vein, and that vein is wide open to depth. We've got one hole down deep that indicates that we could double the depth extent, drilling deeper. And then half of the length that we've drill tested is really wide space drilling. So a lot of that area didn't get pulled into the resource because the data points are too wide apart. So just by infilling, we're going to be able to add some more into the resource update in the future. The grade was 284 grams per ton. Continuity of grade across the veins is really excellent. The average of all the veins, the width is 5 to 6 meters, which is quite impressive when you consider a lot of the mines in Mexico are being mined sub 1 meter, 1.5 meters, 2 meters is a good one. So, and that impacts your mining costs, looking forward if we get to the stage of having a mine with build enough resources to do that, it's really, really positive impact regarding that. We used a very conservative, a realistic cutoff at 150 grams. That's like a realistic mining type cutoff. So we're already, measuring in terms of what could be potentially economic here. When you look at a higher cutoff up to 250 grams, uh, there's a core of high grade that is almost 400 grams per ton and about 34 million ounces out of that total 54 million ounces we have. So that's really, really positive as well for looking forward to future economic studies. So fabulous start. We're really happy with how it's turning out. We've got all kinds of targets to build on the size of this, and we're looking forward to getting back drilling and doing that.
So what happens now that you have the MRE? What are the next steps? What are the next concrete steps that you're going to try to accomplish? And what's the timeline on the next milestone, let's say?
Yeah, so we're financing for the next round of drilling. We've got we've got over 50,000 meters of drilling designed. And to date, we've drilled a total of 53,000 meters. So it'd almost be doubling what we've done. So what we want to do is get a financing for a minimum of about 30,000 meters, and that would be focused on drilling the D vein, the B, and the F vein, which are the majority of our resource right now, because these things are wide open to expansion. So get right in there and start doing that. And then once we close the financing, we'll be in a position to start drilling pretty quickly by mid late July for sure. There's already one drill rig sitting on site, so we're ready to go with permits in place and let's start drilling.
Hmm. Okay, so just that we understand what the steps are, because I don't even myself. First is the maiden resource estimate, and then there's something like an MT 101. I forgot what the term is. But what's like a pre-feasibility study and then a freeze? Where do
Yeah.
these fit in? What are the steps? I forget.
Yeah, so typically when you're referring to 43101, which is a standard for reporting. Yeah, and
Okay.
so when you do a resource, you have to submit a report, a technical report by professionals who do the estimate. And there's a standard form it has to follow and very strict prescribed disclosure in that. It's a real thorough document. So you have to file that document proving what you've done, showing what you've done, how you've done it. And so that goes along with the maiden resource. So the next steps typically are, all right, you make a drill discovery, you keep drilling it, hopefully you have a resource. We certainly do. We got a good one. The maiden resource is your first step, open to expansion. So continue drilling and then have an update on that resource. And then you might have another update after that even. But what you're doing is you're building that resource to the size where you can see, okay, there's enough ounces here. It's time to start looking at economic assessments and putting money toward that. And there's three levels of economic assessment. Preliminary economic assessment is your first step. And if that's positive and shows that, hey, it looks like you could get a good return by building a mine here, you get into more detail and you go into a pre-feasibility study and then eventually a feasibility study, which becomes very detailed with detailed engineering and hard costing, bids even for costing, so you can get as accurate as you can in what the cost is going to be to build a mine and what the returns will be when you start mining.
Hmm. What's the average time in the industry for a primary mine to go from maiden resource to actually drilling? What's the average?
It's over 10 years on from discovery to resource to eventually production. And and in the case of like Las Chispas in Mexico, I think there was 2016, they were producing in about 5 years, which is really fast.
Yeah, so I understand that Kootenay's business model is to reach a certain point of development and then offload the resource to a major mining company. Where are you in that process? How far along and how far does this MRE take you along that road?
Yeah, so the MRE is the first step, and that's exactly right. We're focused on exploring and discovering. And so you need to show enough value in what you've discovered for a mining company to want to buy it out. And that's our objective. That's very typical in the junior exploration business. Make a discovery, you get it to a size where a mining company sees they can build a mine and make a good return on what you've discovered, and then they'll take you out. So sometimes you can do that just by getting the resource big enough. So the MRE is the first step, and that's really starts to get the companies interested. Then you do an updated MRE, you expand the size of that, and occasionally companies are taken out at that stage. But it's much more common nowadays that you have to get at least to a preliminary economic assessment. And you can do that within 2, 3 years of a discovery. And so we're possibly one more resource update away from doing our PEA.
Mhm.
And it just depends on how big that resource gets in the next round.
And so, in terms of who might take the resource, who might take you over, does it have to be necessarily a primary silver mining company, or has it been the case in the past where maybe gold miners become interested, or even base metals miners if they see an opportunity in silver? Is it specific to a company that has to mine silver, or is it any miner generally could just come and show interest?
It could be any miner, but generally companies specialize in producing certain products. So usually it's going to be a silver miner, and the silver probably not their primary metal, because most silver miners, the silver is less than 50% of their revenue. But it'll be a most likely a company that's already producing silver in some aspect.
Meaning either secondarily or primarily?
Yes. Yeah.
I mean, how many primary silver miners are out there that are publicly traded?
Well, if you define them as being greater than 50% of the production, very, very few, maybe two or three.
So are you focusing on those companies or are you looking at them
No, no,
or
it's there's a lot more whose silver production accounts for less than 50% of their production. But so any of those who, any precious metals miners could be interested. Anybody who's reporting a significant amount of silver will be interested. And so that really broadens the scope.
where do you think the price of silver plays into this in terms of interest in the resource? We're at 37 right now, and I wrote a post on Endgame Investor on Substack that the last resistance until the mid 40s is I think 37.43. That was the last level in February 2012. Around that was close to the time when I bought my first junk silver bag. I've bought some more since then, by the dips, but I'm up on the silver, thank God. Recently, uh, but let's say we break into the 40s in the next few months, which I don't see as outlandish at all. I think it's actually probable.
Yeah.
Then how does that affect the timeline? How does that affect interest? Does it affect more the price that you can get for it or the timeline or both? How does it work?
It 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 affects definitely affects the price of our stock. You'll see that in our chart. We got a lot of leverage to silver, so silver price impacts it a lot. It also impacts the interest you get from other mining companies because every price movement up goes right to the bottom line as profit for these companies. And so it impacts that a lot, makes it a lot easier to attract capital as well for further drilling and investing in the project. So it has a big impact on us in all aspects of the business.
And what are your current thoughts on the silver price action? Because the last time we talked, I think we were in maybe the upper 20s or low 30s, and all of a sudden we're at 37. And I think the last time we talked was maybe 6 weeks, 2 months ago, something like that. It hasn't been that long. I mean, things
Yeah.
seem like they're moving fast now.
Yeah, and that's very typical. It takes a long time to set up, and you can see that on the charts that the silver price setting up really, really nicely, testing the downward support, never breaking it. Now it's broke to the upside, and as you say, it gets through this next level of 37 point X dollars an ounce, and it's on its way to over 40 somewhere. And then after that, it'll be testing the old highs. So quite incredible. And these moves happen fast, although they take sometimes years in formation, which is the case now.
Yeah, the problem is, and a lot of these silver critics will say, yeah, these moves take a long time, but then once they do happen, silver just falls right back to planet Earth, falls right back down really quickly. And that was true in 1980. It was true in 2011. Why don't you think it'll be true now? I don't think it'll be true now. What's your take?
Well, 2011, it wasn't a quick fallback because the bull run started in 2002,
Right, that's true. That's true.
and
But
it
we
peaked
didn't
in
maintain, I mean, we didn't
2011 and
maintain mid
2012.
40s or anything like that. But this time I think, there could be a pullback, but I don't once we break through 40, we could break down back below it, but I think the chances of us breaking back below 40 and staying like in the low 30s is much smaller now.
Yeah, yeah. Well, it is, and all to do with really the fiat currency and debt around the world, and it's a different base. The last 25 years ago, silver was basing out at $4 an ounce, even slightly lower. It went from 4 to over 50 in in that run from around 202 to 2002 to 2011, 2012. And so now it retreated to about $15 and really based out at between 15 and 20 for a long time before breaking upward, um, breaking upward in a forceful and convincing manner about a year ago. And now we're on the next, well, in our opinion, bull leg on the upside.
Hmm. Well, what was silver at when Kootenay first got started with Columba? Do you remember?
Yeah, to November 2018, so it was likely under $20. I'd have to look
Right.
at the chart, but yeah,
Right. Okay. So we're basing it around 20 now, and you're saying we base it around 4 in the 2002 run. So that's a 5 times higher base. And the high was there's all kinds of ways you could make these calculations, and none of them are more accurate than the other. I mean, they're all guesses, but
yeah,
4 times, I mean, the high could be something in the hundreds if we have some kind of a 2011 run. If you're using the price to strengthen the resource so that you can develop it quicker, then ultimately that speeds up the process of getting it developed and sold. So,
yeah,
it makes
and
perfect
it's
sense.
more and more valuable with its increasing silver price.
Right. Is there anything else you want to tell investors, potential investors, about the next year or two, what to expect from Kootenay, what are we looking out for, and what investors might have to look forward to?
Yeah, so the next 12 months is lots of drilling, lots more drilling, and towards the end of that, a resource update, and then look at if that resource is strong enough to deliver a PEA. So that's the 12-month time frame.
Okay, so PEA is when you said that the most takeovers happen uh, around that level or somewhere before or after it. Is that what you said?
Yeah, the PEA is sort of the minimum you want to get to. You might deliver a pre-feasibility. And usually with those studies, that's enough for a mining company to make a decision.
All right, so we have that to look for in the next 12 months. And we have a lot to look for in the next 12 months, I think, in the silver market and in the world, which hopefully 12 months from now will be a lot calmer than it is right now. I'd like to get
Yes,
some,
that's so.
I'd like to get some sleep
Yeah.
sometime in the next few days. Hopefully all wars will be ended by the time we speak again, and we'll be on a much more sure footing for the planet and less of a chance of nuclear war, which, isn't so good for the silver industry
No,
or anything else, really.
or humanity.
Yeah. Yeah, so positive thoughts. I'm not really I'm not so worried about it, but it is on my mind. But that's the world as it is today, and hopefully in the next 12 months, not only will we not face nuclear annihilation, but we'll see a much more valuable and exciting Kootenay silver.
Yes, let's hope for all of those things.
Okay, what a way what a way to end it. All right. I'll see you soon, and thanks for coming on and looking forward to speaking to you again.
Okay, Rafi, take care.